Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at different ticker symbols that are in play today. And what we're going to start off first with is IPI. Okay, let's take a look at this potash play here. And the bullish development today is the move above the 50-day simple moving average. So notice the close above this green line and above the middle Bollinger Band. So this is a very bullish close on a volume spike. So that's and then notice the parabolic SAR, the green dots are at 232 right now. So when the share price breaks that level, the dots will flip below the candle. That could signal a potential change in trend. Notice down here in MACD there was a bullish crossover on both time frames. So that is signaling a potential start of a new uptrend here. The key level to break is going to be this closing price on January the 25th. If it can close above that level, then you're talking about the close back here back in December. The December high close will be the next key level to break. If you can get above that, then it could really get running and run back up into the threes. So IPI has been trading in this sideways channel, and right now this high close here is the top of this channel that's been going on for a month and a half. So if it can break above that level, that will be very, very bullish. You want to see it close above that level. There are 4 green volume bars in a row, so this has been a multi-day run already. The nice thing is if you look up here at RSI, it is only at 59.70, so that tells you that it's still got a ways to go until overbought levels. And then even if you look back here at this prior run, it ran all the way up in here into the mid 80s. So, and that was during this long push. So that does show that IPI has a history of being able to head higher in the overbought power zone on both RSI and Fasto here at 78.79. Notice here it was pushing higher above 80 on previous runs. So yeah, so keep an eye on IPI here. This is a very nice move today. Okay, let's look at REXX. Okay, this is a stock that we've been charting for a while, and we've been looking for a bounce, and it's happened a couple times, but they've been false signals. There's been a bounce and a sideways trend, and today it looks like this could be the move to really get it going. We will see. If you look here, RSI and Fasto, they both closed above 50 and in the bull zone, and they both have room to run until overbought levels. So that is a very bullish development on both indicators. Look here at ADX on plus DI and minus DI. Plus DI is starting to bullish crossover 80 or minus DI, and so what that's telling you is the bulls are starting to take control. That is another nice development. What we're looking at today is a close above EMAs 4, 8, and 13. So that was a very nice close above resistance. Notice the previous candles were closing below EMAs 4 and 8. There was a close right here last week above EMA 4, but during this downtrend it had been resistance. So this could signal the start of a reversal. There was a nice bounce last week off the 50-day simple moving average. Notice how the 200-day simple moving average held. That's this red line here. The green line is the 50-day simple moving average. What we want to see now is a break above the middle Bollinger Band and the 300-day simple moving average at 71. If it can close above 71, currently at 713, that should be the bull signal that it's ready to head higher. Then you'll be talking about this high close back here on the 18th of January as the key level to break, and that could be the signal that it's finally going to try to make a run back to dollar land. So in order to reverse this downtrend that's been starting, it has to close above the middle Bollinger Band and the 300-day simple moving average. It does look like it's heating up. If you look down here on MACD, there was the start of a bullish crossover on the 8, 13, and 5. Need to see that start to pinch on the 12, 26, and 9. If you notice here, the volume is very low, so it's going to need some volume to push through resistance. So keep an eye out for a bullish volume spike. That is a nice development that it was able to close strong today on light volume. That's showing that the sellers have tired. Okay, so let's look here at UNG. This is United States Natural Gas Fund, and a lot of people like to trade UGAZ and DGAZ. UGAZ UGAZ is 3 times ETF, supposed to be tracking the UNG here, and it's tracking natural gas, and so DGAS is the inverse of that, and that's the way you can short natural gas, but it's 3 times, so it's supposed to go 3 times the move of UNG here. So let's say UNG was down 3% today. That would imply, this is just it's not exact, but that would imply that DGAZ would be up 9% and UGAZ would be down 9%. So 3 times the UNG. So if you want to follow UGAZ and you want to follow DGAZ, you want to trade those tickers, you need to be following UNG. Okay, so this is for a lot of new traders watch these videos, so I'm just trying to explain to them, how this works and what the ETFs are that everybody trades. So if you look here at RSI, you'll see that RSI here is getting close to the 30 oversold line. The interesting development is FASTO down here at 0.61. That's extreme oversold levels. Look at this chart here. You'll notice that this is the bottom. This is the bottom for FASTO. So it doesn't get any lower than 0.00. So this is extreme oversold levels. It's due for a bounce. If you look here, it's hitting support from back here in November. This is the 3rd week of November support zone. It is that today's candle did close below the lower Bollinger Band. Many times stocks will bounce when they break lower Bollinger Band support. If it does bounce tomorrow, EMA 4 at 758 will be the key level to break. Until the candles get above EMAs 4 and 8, and now back above the 300-day simple moving average, there's going to be more downside risk for natural gas. This is a really nasty downtrend. Notice that this is the middle Bollinger Band all the way up here at the dotted line. This is the green line is the 50-day simple moving average. The gold line is the 100-day simple moving average. The red line is the 200-day simple moving average. And then you have the middle Bollinger Band and the 300-day simple moving average. And then you have the EMAs 4, 8, and 13. Natural gas is trading below all the moving averages that we follow. Okay, and it's trading below the lower Bollinger Band. I mean, this is pretty much as bearish as it gets, right? This is just looking like a big pile of poo-poo here. So yeah, so UNG is getting crushed right now. So this is hitting levels where it should find support. If this breaks here at 730, it could drop down here to 690. So it really should hold down here at this November support. Notice this was the bottom of this really strong V pattern. If you look at this chart, there's almost like a mirror reflection here. The move up, down, and then back up, and now it's working back down. So it's completed this whole pattern here, and so now there's going to be a new pattern should begin soon, and so it should be breaking away from this from this previous this whole cycle has been completed. And so now what is the direction of natural gas? Is it going to push lower? Well, if it breaks below 690 and you get a close below those levels, that is going to signal more downside risk. And yeah, you can see it drop much lower. As long as candles keep forming below the middle Bollinger Band, that is going to be bullish for DGAS and bearish for UGAS. If candles are staying below EMAs 4 and 8, that is extreme bearishness. You could get some dead cat bounces here, but as long as they keep staying below those levels, it's going to signal more downside risk for natural gas. The MACD bear cross back here was your signal that there was more risk to be had, and that was when the middle Bollinger Band failed to turn into support back here. Notice this black candle. There was a gap up open followed by a black candle. That was a red flag, and then when this failed to hold, that was your signal that this was going to drop, and that was the time to jump into DGAS. Okay, so these ETFs are really fun. You can jump back and forth, and you can easily short natural gas by going with DGAS, and you can easily go long by going UGAS. Just flip-flop back and forth. Just follow the charts. Okay, here's PSIX. Okay, look at this here. Nice close above 30 oversold line. And then there was a nice bullish crossover on FASTO. Still below the 20 oversold line. If it can break above 20, that would be a bullish development. So this is, coming off of oversold levels. There was this huge drop. Candles were below the lower Bollinger Band, like I was just talking about with UNG. The candles worked back into the bands. And so what happens is we look for a close above EMA4, which is this pink line here, to signal that the dead cat has bounced and has finally got a little upside potential. And that's what the charts are signaling today, that there's a possible move up here to this EMA4 at 408. That will be the next key level to break. It's going to have to get past this close right here on the 7th. If it can close above the closing price on the 7th and then get above EMA8, you could see a run possibly, back up here to the middle Bollinger Band. Of course, it will have to get past EMA13 as well. But first things first, this was the dead cat bounce here. Volume is still really light. If it can turn EMA4 into support, that could be signal the start of a nice reversal here. For dead cat bounce plays, you always want to follow the intraday charts. The PSIX will be a risk to hold if the 15-minute chart is bearish with candles forming below the middle Bollinger Band. So when stocks are in a heavy downtrend on the daily chart, you really don't want to hold overnight if the intraday charts are bearish. It just signals more downside risk. It just depends on your tolerance for risk and how much you want to take. Look here at the MACD is pinched here on the 8, 13, and 5. Bulls want to see a bullish crossover. Okay, let's take a look at DRYS. DRYS is a play that everybody loves to trade. Nice bullish development here today. Notice the close above EMA's 4 and 8. The candles were forming below. This gap filled. There was a gap between the 7th and the 8th. Notice this gap down. That filled today. So we're going to see if the gap fill is going to be an exhaustion or not. Because notice how the close was right at the top of the gap. So that is always a tough level to break. So keep that in mind. When a gap fills to the upside like this, when this is a down gap, when the gap fills to the upside, the top of the gap many times becomes resistance, and then you'll see that's the climax and it pulls back. So we'll see if it can break above that level. It's not surprising that it stopped there. If you can get a close above the bottom of the gap and then a close above, there's a couple of resistance levels all converging at the same level. You've got the high close here on February 8th. You've got EMA 13 and the middle Bollinger Band all converging at the same level, roughly around, let's say, 540 to 550. If you can get, if DRYS can close above all those levels, now you're talking. Now it could really get going, and it could possibly go back and fill this gap from January between the 20th and 23rd. Notice there's an unfilled gap back here. I've had my eye on that. I'm thinking that could be a target for these for the traders here. If it fills that gap, you might see a run back up to this upper Bollinger Band. There's been heavy consolidation sideways here for many days, and DRYS has held up considerably well. Notice how it's held for this 4 zone for many days. That's pretty impressive for a stock that is known just to plummet pretty hard after dead cat bounces like this. Now the one red flag is if the EMA4 does turn into resistance and it breaks below 4 here, it could drop down to, if it gets past this 350, it could drop down and fill this gap. There is an unfilled gap between the 30th and the 31st, so that is the red flag, and that is the downside risk potential. Okay, so for the bulls, you want to see a close above the middle Bollinger Band. I thought this was interesting with Fasto. Notice how it keeps working its way higher. This is during the consolidation. It shows that the chart is heating up. It's building. Now it's in the bull zone here between 50 and 80, and then you have RSI here is hitting the previous peak. Notice the previous high on the 8th. This is lined up now with that same level. If it can break above this 37 and start heading towards 50, that would be your signal that the chart is getting heating up. Okay, let's look at CVM. CVM here had a very bullish move today, closed at high of day. That pushed Fasto to 100. It's got RSI in the 50 to 70 bull zone. Fasto means it's temporarily overbought. Okay, so this play came on our radar on this day here when it closed above the 50-day simple moving average. That signaled that it was heating up, and it's had nice follow through. The closing price back here on January 10th is the key level to break. If it can break that, we're thinking it could run to the 100-day simple moving average at 19. That's the eventual target. target. As long as the 50-day simple moving average holds, it should head to that level. If it fails to break 16, you could see a pullback. On a pullback, you want to see EMA 13, EMA 4 at 13 hold. Okay, there was a nice volume spike today, so there's good volume behind this move. It looks like it wants to push higher. There is more room to run on RSI. So we'll see if the if today's push to 100 on Fasto is the will take a little time to pause, or if it can break through that 16 resistance. Okay, let's look at PVCT. It's in the 50 to 70 bull zone here on RSI, and then there's a bullish crossover on Fasto. We want to see Fasto back above 50. Notice here that on ADX, minus DI and ADX are pinched. A crossover there would be a signal that the bears are cooling down. Okay, we're watching this play because it looks like it's setting up here. Notice how the chart has been consolidating sideways for many, many days here. Just like I said about CVM closing above the 50-day simple moving average, which is the green line here. That's what happened here with PVCT. It's been turning the 50-day simple moving average into support. Notice how it was on this long downtrend and now it's leveled out. So it's been holding. And so what we want to see now is a break above this 0.022 resistance. If it can break above that, we're thinking it could run all the way up here to the 100-day simple moving average at 0.039. Keep an eye on this. This is a chart that looks like it's heating up, and this could be a runner coming up. Okay, let's look at RNN. RNN here is a stock that has been running, and it closed really, really strong today on the daily chart. So I wanted to show you a weekly chart here to show you what's happening. When a stock's breaking out on the daily chart, we like to use a weekly chart to find resistance. Okay, there's still a little bit more room to run on RSI. It's at 66, so it's not at overbought levels yet. Fasto is at 96, so it is getting kind of frothy on RSI. Notice the bullish crossover there on ADX. So this is nice. This is signaling that the bulls are heating up. If you look down here, the bullish development this week is the move above the 50-week moving average. That's the green line here. So that's a very bullish move on a big volume spike. There is an unfilled gap on the chart between last week, high of week, and this week, low of week. So that's something to always keep an eye on. What bulls want to see is they want to see the 50-week moving average turn into support. They want to see it close above that on Friday. Now this chart, this chart will not set, this candle will not set until the closing bell on Friday. So it could pull back and fill that gap this week. So things can change throughout the week. Now if it stays strong, our target's going to be this 100-week moving average at 38. That's the next big target. There's going to be resistance along the way. There's horizontal resistance. There's big support here. It busted above that. There's going to be levels to break on horizontal resistance. But the key is that if it keeps a strong uptrend going, it could run right up to that 100-week moving average. That big bullish volume spike is signaling more upside potential. MACD is looking very strong right now. It's pointing up. So the weekly chart for RNN is very, very strong. Just getting a little frothy on Fasto, that's all. Okay, let's look at SALT, S-A-L-T. This is one of the marine transportation stocks. Everybody has seen SINO today. You notice that we chart most of these stocks in this sector, and so we've just been trying to pick them off one by one. And this looks like another chart that's setting up. Sino, is the big runner today. Hopefully we can just get these as they're popping. And this right here has RSI in the 50 to 70 bull zone, Fasto in the 50 to 80 bull zone. Now today there was this nice move above the high close here on the 6th of February. That's going to be the key level to break. It's right about 775. If it can get a close above that, I think it's going to break out higher. So it broke that intraday. It needs to get back above that. It's been channeling sideways. It's got this sideways trend going. There's this pinch over here on MACD on the 8, 13, and 5. If that crosses over, that'll be an early signal. There was a parabolic SAR bull cross on the 6. The chart is winding tight. Keep an eye on it. There's Fasto and RSI are in the bull zone, so there is juice to run. This could break out, so keep an eye on it. Okay, how about STNG? All right, they reported earnings today. The street liked it, closed up 11%. You look for RSI to break above 50. That'll be a signal the chart is heating up. If Fasto closed in the 50-80 bull zone, that was very bullish. There was a bullish crossover on ADX. Look at how it crossed over minus DI and ADX. So that was very strong move there. It's showing that the bulls are really heating up. There was a nice close today above the middle Bollinger Band. That's the dotted purple line at 390. You want to see that level turn into support. If that holds, there should be a push up here to the 150-day simple moving average here at 425. That is the next target. If it can get above that, then we're talking about a run possibly to the 200-day simple moving average at 453. Notice the long upper wick on today's candle. That does show profit taking along with the volume here, the big volume. So that could be a little bit of dilution. We're not sure. It could be people pulling it back to load for a push higher. The close above the middle Bollinger Band is signaling the possible start of a new uptrend. Confirming that is also the parabolic star bullish flip. Notice how the green dots flip below the candles. They're above the candles during this whole downtrend. And then the flip below is signaling that there's possibly a new uptrend starting. That is being confirmed here on MACD with this pinch and start of a crossover. Notice how the histogram's at 0.002. That signals the start of a crossover. So that, accompanied with a big volume spike, these are all pointing to potential more upside for Sting. So we're looking for a possible new uptrend. Okay, and yeah, that looks like about it here. Thank you for viewing these charts. I hope you enjoyed them. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis. Thank you.